Let's welcome on board then two guests who are joining in for a quick chat. We've got Arun Thukral, MD and CEO of Axis Securities, and of course Guardian stockbrokers Atif Latif joins in from London as well. Gentlemen, both of you, thanks so much for taking time out for us. Mr. Thukral, let me begin by asking you, the last 5 or 6 sessions for us have been pretty good. We've been going from strength to strength, a little bit of profit booking today. Nonetheless, the Nifty managing to hang on to 7,900. What have you made of the moves of the market, in the last couple of days? And do you believe that we're only going to go higher from here, or is there some resistance in store?
So the last 5 or 6 days have been really great, and there is a feel-good factor now. Maybe I think it started with a good monsoon prediction that IMD and SkyMet both said that the monsoon is going to be very good. And after let's say last 2 monsoons have been a major setback. And now because this El Nino effect waning by, let's say, June 16, and so we hope that July, August, there will be good rains, and starting in June, obviously, and that will help Rabi and Kharif crops. And then finally, what we are expecting, that La Nina effect should settle. So maybe that will help us, and if that sustains, then the market will be happy. And so based on this, the markets have cheered that, and last 1 or 2 days, if you look at results, also have been good. So we are hoping that the market should take off from here. Market should be better from this level.
Are you not concerned about how global markets are faring? Because they also, after a 15-20% rally, are kind of getting jittery now. Chinese central bank, which really fueled the rebound last couple of weeks back, today says that perhaps aggressive stimulus may not be required for Chinese economy, because of which markets are to melt there. Is that risk not being considered, or it's not appropriate to look at that anymore?
So you have to look at global cues all the time. I agree with you. But more importantly, I think finally at some point of time we have to look at India. What India is doing, because if you look at China, there are issues. If you look at Japan, there are issues, or Europe. But if you look at India, there are many things happening. So if you ask me about, because we are talking about primarily India story. So for me, I think there is a economic cleanup mission is there. If you look at last 1 or 2 years, what is happening? If you look at coal productions have picked up. If you look at telecom licenses have been auctioned appropriately. If you look at road activity has picked up. If you look at orders have been placed in railway and defense. And if you look at many environmental clearance are being given. So what I feel that there is a platform of growth being built up in India. So obviously there will be jitter, there will be issues coming from China, Japan, EU, or maybe Brexit, what we call now. But I think these are the opportunities. These are the opportunities for Indian investor to actually now look at market seriously and start getting in at every dip.
Right. Atif, what are your thoughts on the cues which are coming from China now? Today the Shenzhen index was down 5%, the Shanghai index 2.5%. Do you think the authorities would continue to take the reform route, or at least the commentary today seemed to be suggesting that they may not consider much more aggressive stimulus anymore?
There's a lot of speculation about where Chinese growth will be in the coming years, even with the data that some will argue isn't really dependable. We do think that Chinese growth will stay probably close to 6.5% to 6.6% if you read the recent economist reports. But given the outlook for China is very stable at the moment, given all the news we have seen out, but the outlook is still very uncertain. And the Chinese government is very quick to add more stimulus to the market, but the effect of this will be less and less in the coming months. But we still think that the greatest risk to the market at the moment at this juncture is still China.
Atif, the other trend that we've been seeing of late is how equity markets and oil markets are sort of moving in lockstep. Given the stalemate that emerged from that Doha meet on which everybody had their sort of hopes pinned, where do you see oil headed in the near term?
Well, I think what we're looking at is there was an expectation that we might see some sort of clarity come out of Doha from the weekend, but obviously nothing's happened and transpired as yet. But what that means is that the oil price rallied quite hard into this expectation that we would get some sort of resolution. And what we expect now to happen is the oil price to materially start to decrease again. But we don't really think it's going to go much closer to 30 on the low side. We think it'll stay high 30s. And I think with that, what we do expect also is that those that were long and who have closed these positions out into Sunday will start coming back in. But overall, we think that the expectation and the news that we have seen should start to be reflected in the price. And with that, we expect some natural buying to come back in.
Well, since we're talking about oil, what's your view, especially on the oil marketing companies, given that we've seen a fair amount of volatility just in the last week? Where should one look to hide if they were betting on oil at all?
So oil, I think what you said is right, that Doha meet and the way the Iran behaved and other countries also doing. We are saying that we are cautious. We are saying that oil is around $40 and with a negative bias. So as far as we are concerned, we are right now cautious and not looking at these companies. And maybe we are advising our investors to look at, there are other sectors available. So why don't you get in that? As of now, we are cautious.
Right, Arun, talking of other sectors, which are those sectors which you are looking at? Are you looking at pharma, which has corrected some good 20-25%, at least the large companies from the top, or some of the auto companies which are already at 52-week highs? Or how are you analyzing the IT results which have come so far?
So I'll not get into the specific companies. Obviously, the IT results have been good. If you look at last 2 days, whether it is Infosys and TCS and even Wipro in line. So as a sector, we are obviously liking IT, and IT has so far always impressed us, the kind of results, even if you look at some of the companies' guidance, which are better than the NASSCOM guidance. So obviously IT is one of the sector. Auto ancillaries, yes, we are bullish. Infra also we are looking at, because if the India story plays, if this Clean Up India mission is successful, then obviously there will be huge re-rating in the infrastructure. So we are also telling our customers, retail investors at least, to keep on buying small quantities and get into these sectors also, because we feel that there will be a re-rating in these sectors.
Atif, at Guardian Stockbroking, what are you guys looking at as far as emerging markets are concerned? They were a big beneficiary of flows for the last couple of weeks. India also, has a rebound, good 15% on the Nifty on the back of those flows. But last 2-3 days data indicate that there has been some profit taking. What's your outlook on emerging markets?
Given India, for example, where we've been a big advocate of having exposure to the growth story in India, and if you look at the sort of stable outlook we're seeing in India just now, they import almost 80% of their energy, and they are importing it at this juncture. Inflation at the moment is well behaved, but we have seen 4 cuts in the rate last year. We expect another 25 basis point cut this year, and with that, what we do expect is inflation to go to about 5% next year and about 4.2% the year after. But given the outlook for India is still very strong, if Modi delivers on the promises he made in the elections, then we do think the manufacturing, production and the inward investment in India will continue to move forward in the coming years.
Mm-hmm. Right. Gentlemen, before we wind this discussion up, Mr. Thukral, I just wanted to get a sense, you began this discussion by saying that there's this feel-good factor. Just wondering if, the kind of interest that you're seeing from retail investors, given that you represent Axis Securities, is it sort of improving as the months are going by? Because, the fact is that 2016 so far has been very volatile. And I know that, last year, if FII sort of shied away, it was domestic institutions and domestic retail investors that really helped prop up the market. So far, what would you say the mood is like, and are you sort of seeing any pressure at all?
So as you said correctly, that yes, there is volatility. So what we are advising our retail investor is that use this volatility to buy at and buy very small quantities. And as we know that last year, the money from domestic investors have been very good, which is a good news for us. So what has happened over the last many years, if you look at long-term returns of equity market, it is around 17-18%. But if you look at the retail investor returns, they are nowhere close, because as we all know that they will get in when the markets have gone up, and they will fear to buy when the markets are low. So that is what we are telling them, that these are the opportunities to get in. Don't get in when the market goes up and then the euphoria sets in. So that is, I think, that is a challenge always to convince a retail investor, and that is what we do at all time. That is why we also tell them to use the SIP route, whether it is a mutual fund systematic investment plan or even good quality stocks, buy in a small quantities. Another thing we tell them that you should always, from a retail investor point of view, look at the valuation of the market. So at this point, the market is at around 15 PE, which is a good valuation for a retail investor. And when market reaches around 23, 24, that time they should start looking at booking profits. And I think that is what at all point of time we tell the investor. And this time we have seen that over last 1 or 2 years, the investors have become smarter and smarter. And hopefully the things should improve and retail investors should finally able to participate in India's story and reap the same kind of return with the normally an institutional investor gets.
Thukral and Atif, both of you, gentlemen, thanks so much for taking time out for us here on Smart Markets. Thank you. We really appreciate it. Let's move on. Get you some corporate earnings. You had Wipro that put out a pretty muted fourth quarter showing, actually. Dollar revenue has grown over 2% to come in at $1,882 million. Margins also for the company have stayed flat at about 20.1%.